Is the Bitcoin 4-year cycle dead? It's a controversial statement. Maybe Wall Street really has changed the game. We've got institutions with deep pockets entering the game in a way they never did before. Companies stacking Bitcoin treasuries like it's Black Friday. And it's not just Bitcoin anymore, it's altcoins too. Is Bitcoin simply going to start following tech stocks? Are we about to lose one of the best indicators from previous cycles? The game has truly changed. We're going to follow the gold fractal from the ETF era. Stick around until the end of the video as we try to find out the answer. You see, Bitcoin has followed a surprisingly consistent pattern since its inception, and I know it's not a lot of historical data to work with, but the 4-year cycle roughly has played out for crypto. So far. See, the idea is Bitcoin undergoes a halving, the reward for mining new blocks gets cut in half, this reduces the rate at which new Bitcoins enter into circulation, demand's always rising, so therefore historically it's kind of the starting run for a massive bull run. Let's rewind. The 2012 halving led to a bull run that peaked in 2013. The 2016 halving kicked off the 2017 rally, and the 2020 halving, of course, kicked off the 2021 euphoric top. Each cycle followed a relatively similar rhythm: halving, euphoria, crash, accumulation, halving again. It's been simple until now. Now, it's great to see that this has been this nice, reliable pattern in crypto, and everybody feels very comfortable with it, and it still remains to be disproven. We need to get past November, December, January to say it's been broken or not, because until now, everything's been working. But this time, the players have changed, so has the game changed? Is the cycle really different? This time is different is a scary thing to say. The most dangerous words in investing, it was called before. But what if it's not that this time is different? This time is actually the same. We're actually just growing up. Let's rewind in time to the gold ETF. You see, now with Bitcoin, the whales of Wall Street are fully in the game. Better understand why this matters. Gold gives us a great parallel. Back in 2004, State Street launched the first gold ETF in the USA, the SPDR Gold Shares. Then in early 2005, BlackRock joined the game with its own fund, the iShares Gold Trust, and institutional adoption really kicked into high gear. Gold had basically been stuck in this sideways market for years, not getting a lot of bid. There wasn't easy access for Wall Street money. However, once institutions had a clean, regulated way to get exposure with major institutions like BlackRock and State Street, they piled in. In just a few years, gold went from a relatively sleepy commodity to a must-have hedge. Fast forward to January 2024, and digital gold is the new must-have hedge. The SEC approved pending Bitcoin ETF applications, which included BlackRock, Fidelity, and other big names in the financial industry: VanEck, Franklin Templeton, Bitwise, and others. Suddenly, Bitcoin is no longer just for crypto bros, man, or some tech-savvy, nerdy investors. No. It's a serious asset class now, sitting in the same portfolios in your brokerage account along with your Apple and your Microsoft stocks. You got your Bitcoin ETF. This shift is massive. Institutions don't behave like retail. For one, they have trillions of dollars under management. They think in quarters and years, not days and memes, and they tend to follow broader market cycles like the S&P 500, which typically moves in a 5 to 6 year bull market cycle. This, by the way, is a very young bull market, only 2.5 years. The average bull market is 5 to 6 years. We're only halfway through a stock bull market. Now, if Bitcoin is now being traded and bought and held more like a tech stock, or we have the parallel to the gold ETF, then maybe it's time to question whether the 4-year cycle still applies at all. I know that sounds like a bad thing, but what if I tell you that one of the longest bull markets recorded by the S&P 500 lasted from 2009 to 2020, 11 effing years. And this stock bull market, again, is just 2.5 years old. It's an effing baby. 9 more years of uptrend, that would be insane. What if we just get 2.5 to 3 more years? That's also insane and breaks everybody's expectations about what to expect for a cryptocurrency cycle. Sign me up for that. By the way, speaking of signing up for stuff, if you are ready to trade crypto, Bitcoin, Solana, Ethereum, and actually compete for real money, then listen up, because right now FEMX is launching a $5 million trading competition. That's right, $5 million. $3 million in team prizes, $1.5 million for individual top traders, and $500,000 newcomer challenge for fresh signups. Anyone, anywhere in the world can join. And you can join my trading team right now using the link right down here and compete with the top traders on FEMX. Trading officially begins June 9th and it goes through June 30th. Registration is open now. Trading is open now. This is one of the biggest events in crypto trading this year. And if you want in on that action, then you got to be signed up. hit the link, join my team, get on Femex today, and let's win together. So, Bitcoin for your cycle. If Bitcoin is now trading more like a tech stock, or we can draw the parallel to the gold ETF launch, which by the way was an 8-year bull run when that happened, then how are we supposed to predict its macro movements? Well, history might teach us a lesson or two here. In 1996, the internet was just beginning to change the world. Good times. A 10-year-old Lark was on web TV trading Magic the Gathering cards. Good times. Amazon was barely a year old. Most people were still using dial-up internet, man. Good days. Can't use the phone. I'm on the computer. I know you guys know. Anyway, capital was starting to flow, and in record amounts by 1997. By 1999, nearly 40% of all venture capital was investing in internet startups. The dot-com boom. That same year, there was 457 IPOs. That's crazy stuff, man. Between 1996 and early 2000, the NASDAQ rose over 500%. The numbers are crazy, man. These gains were massive, but they didn't come all at once and they didn't last. There was a bubble. Now, the early years of that bubble felt normal. Just steady growth, lots of hype, but also a lot of skepticism. Bull markets always climb the wall of worry, right? Now compare that to today's AI boom. NVIDIA is the poster child. AI is in every earnings call. And if you look at NVIDIA's chart, it's risen an insane 900% since ChatGPT was released at the start of 2023, end of 2022, whenever it came out. And since then, every company is trying to become an AI company. It's the most important technology probably ever developed in the entire history of humanity. And just like in the early part of the dot-com craze, we're going to see all kinds of crazy, but I don't think we're at the crazy bubble stage yet. We're still in a relatively quiet phase despite some of the big gains on some of the big tech stocks. Right now, there's no sign that the AI boom is going to go anywhere anytime soon. In fact, we're about to go to the next level as AI gets even crazier and more companies bring stuff in and more companies announce IPOs. IPOs are coming back. Look at the Circle IPO. We're going to see robotics come on next. It's going to be crazy. And if history rhymes, we might still be in the early innings of the .ai boom, essentially. We're like in 1996. Okay, and if that's true, then Bitcoin, which is now supposedly increasingly trading like a tech asset, could still have years of upside ahead. Again, the cycle could be broken. It rides the AI tech craze. It rides the stock market. Average returns, 6 years, right? It rides the gold ETF parallel. So is the 4-year cycle truly dead? Fact is, nobody knows. I don't fucking know. Is it too early to say? Yes, it is too early to say, because guess what? The 4-year cycle ends at the end of this year. So I guess if we get a new high in March or April of 2026, it's over. 4-year cycle done. But I found one crazy chart that still says the 4-year cycle could be alive. And well, the name of the theory is November 28th cycles theory. Care to guess when we'll peak according to this? Hell yeah, 28th of November this year. There's a theory that basically the high comes within a month on either end of November 28th. Could be October 28th, could be December 28th. But that 2-month window, that's when Bitcoin tops, according to the 4-year cycle theory. So pretty much the 4-year cycle theory says that we'll peak around 500 days, give or take a few days after the Bitcoin halving. But this one has more clarity on the exact time frame. Now look, I am certainly not closing off the possibility that the 4-year cycle is gonna play out, but it might be broken this time. And I think there's some pretty compelling reasons to think, shit, we may go way higher for way longer than everybody expects. I know what you're thinking. I'm tired, boss. I can't do it. Do it. Lock the F in. Make the money. You got 3 to 5 years before the robots take your job. And if you're not rich by then, you're fucked. I still believe we might be looking at a cycle top later this year, early 2026. If we take M2 correlations, the guys from Real Vision are saying M2 is going to pump into like Q2 2026. Maybe then we top. Sure. Besides, does it really matter, guys? Really? Yeah, okay, maybe if you're trying to time the top to maximize your gains perfectly, at the end of the day, one Bitcoin's still gonna be one Bitcoin. If you hold a Bitcoin long term, you're gonna be doing so well compared to the average people in this world. Bitcoin's going to multi-millions of dollars over time. It'll be worth $1 million in the 2030s, multi-millions probably in the 2040s. Zoom out and the mission hasn't changed. The problems Bitcoin was built to solve, monetary debasement, centralized control, systemic fragility, they're still here. They haven't gone away. So does it matter truly whether the next top is in 2025 or 2026? And dare I whisper of a crazy idea, 2027 or 2028, if we follow the average stock market cycle? Institutions, sovereign states, they're the players now, and these guys have near infinite amounts of money. and they keep piling in. Do you think they care about the 4-year Bitcoin cycle? Sorry, America, you can't buy Bitcoin for your strategic reserve. The 4-year cycle's here. Just wait. No, they are just gonna stack. Some are even borrowing to load up, playing the long game here. Zoom out, understand what's happening, and be open to different possibilities. Again, I'm not saying this is a definitive theory. I'm saying there's a lot of interesting ideas as to why we could see the 4-year cycle truly break. Remains to be proven. The only question left is, do you have enough Bitcoin? Thanks for watching.